Boom, bada bang. Welcome back to Data Dispatch. Hope you guys are having a great day. Let's listen to this quick clip that BP gave from its earnings call, basically giving Palantir a major thank you regarding all the money that they've helped them save. Roll the clip here.
We have also taken further steps this quarter to deliver the next wave of efficiencies to simplify BP. Kate will cover much of this in her section, but I would like to discuss our next wave of action in digital. Over the past 10 years, we have made significant investment in our oil and gas business to create a highly advantaged global analytics platform. The advent of the next generation of AI is allowing us to once again team up with our partner Palantir to take this to the next level. AI boot camps have been held with our engineers and use cases are being progressed. Already, we can see ways to drive a meaningful improvement in efficiency across many of our core engineering processes. Additionally, we're working with Palantir and teaming up with Infosys to accelerate the digitization of our refining operations. We will update you on progress as we move forward, and I'm very excited about this opportunity, as I firmly believe companies with well-managed data, or digital ontology as it's known, can use this technology to be safer, faster, more efficient, and create a lot of value for you, our shareholders.
Couldn't have said it any better. Talking about here, the advent of the next generation of AI is allowing us to once again team up with our partner Palantir to take this to the next level with the digitization, the ontology, and the utility that Palantir really brings regarding incorporating AI into these multiple new commercial clients. Now, AI boot camps that we have seen for a while now, since the launch of AIP, have been incredibly beneficial. And we're seeing this coming to fruition in the reality that's being displayed right in front of our eyes. You can see here at least $2 billion BP is predicting in sustainable cost reductions by the end of 2026. $2 billion. And talking about what we got for the market today, Palantir does a great job holding at nearly record highs. We've seen these record highs, and consolidation here is quite interesting, especially with earnings that's going to be coming up next week, November 4th, after the market close and the day before the election. Holy Toledo. We're going to be talking about some important things that are happening with Palantir, what we can be expecting in terms of earnings, and also what's the major impacts that we're seeing in the market today. Of course, not a financial advisor, so take everything I say with a grain of salt. Hit that like button and subscribe for daily videos. Now, Palantir at $44.93. Trading volume slightly lower than 30 million, what we've typically seen on the average here kind of in the last 3 months. But nonetheless, options are still looking pretty good in terms of call activity at the 45 compared to the puts here. A lot of people are still expecting Palantir to have a little bit of a run up here, trading on the anticipation of what earnings is going to do. Now, remember, earnings, that's going to be happening November 4th, like we just said. However, earnings per share is estimated to be at 9 cents, correlated with the revenue of $703 million, with 11 earnings per share revisions in the bullish directions in the last 90 days. This is great to see that the earnings per share revisions are continuing to be bullish, because it shows that the Wall Street gurus are pushing the expectations higher. And what we've seen for the previous 6-7 quarters is Palantir is continuing to beat those expectations. And I think with the lucrative amount of demands that we've seen regarding AIP, commercial contracts, governmental contracts, on top of that, the demand is very high. I think Palantir is going to continue with his historical track record in terms of earnings reports. That's just my opinion, though. However, let's talk about an interesting article here looking about Palantir continuing to grow its returns on capital, looking at a specific metric right here. Now, they're talking about a metric, return on capital employed, ROCE. And what is it? Talking about, if you haven't really seen ROCE before, it measures the return pre-tax profit a company generates from capital employed in its business. Now, analysts use this formula to calculate it for Palantir Technologies. And looking at the recent trends, you can put this whole algorithm, blah, blah, blah. But what we've seen is that Palantir Technologies has this return on capital employed of 6.7%. Now, that's a low return under the performance average of software industries of 8.6%. However, looking at the bounce that they've made, their ROCE 3 years ago was negative 52.8%. Now they're at 6.7%. Talking about prior performance, the future, they say here, is arguably very important. And talking about what analysts are forecasted going forward, what does this tell us for Palantir Technologies? About 5 years ago, we see that they were generating a lot of losses, but we've seen that turnaround now with earnings of that 6.7% of the capital. Not only that, the company is actually utilizing 397%, so basically 4x more capital than before, but that's expected to be from a company trying to take a break in profitability or trying to break in profitability. This can indicate that there's a lot of room for opportunities and what their take is right here. Given that they're making a lot of money, we see that with Palantir, now earning 6.7% on its capital is great, and they're also making a lot of money just with their cash that they have on hand, just into their actual investments, not what's coming strictly from new additions on commercial revenue and governmental revenue, even though those are still also increasing. So you have a win-win-win type of situation there for Palantir that has been incredibly successful. And we see that they're continuing to be a leader in the AI industry and really holding that competitive edge in terms of the products that they do offer compared to the other SaaS types AI companies. Now, this is a big delight to most shareholders. You see right here with this, what they say, respectable 69% awarded to those who held the stock over the last 3 years. Everybody's basically up in Palantir because it's trading at these record highs, basically all-time highs. We could see it crossing all-time highs here in the near future, depending on how it's going to gear up and specifically what the momentum is going to be. Now, of course, valuation, the big red flag, everybody talks about that. It's the biggest criticism for Palantir. However, right now, of course, valuation could come kicking Palantir in the butt at any time. That's where the risk for downside potential is incredibly high, especially as we speak. And with the turns that we're seeing in the market, we're starting to see treasury yields that are going back up on the rise, along with mortgage rates. And I think this election is going to also bring a lot of volatility into the market. Entry points at these price zones may not be 100%. If I was looking to take entry right now, I personally would be waiting for a pullback. And that is because Palantir is very expensive. However, that doesn't mean that the stock is not going to go higher in terms of possibilities. Probabilities, there's a lot of momentum behind the AI industry. And with the volatility that we're going to see in terms of earnings coming up, things could go either way. However, I know that Palantir is at all-time highs right now. A bullish cup and handle pattern that we talked about yesterday, a 3-year cup and handle pattern is being formed. So if you like that technical analysis stuff, there's another bullish indicator. Now, what's happening in the market? You got the stock market rising, tech stocks doing very well, sending the NASDAQ to record highs as most of Wall Street tumbles. An interesting headline there. NASDAQ is up 0.78%, S&P 500 up 0.15% right here. Now, we have a lot of rallying tech stocks that are sending the record highs on Thursday. Trading was mixed among a lot of the home builders, and Ford Motor is continuing to have a big correction in its actual price following the latest profit reports. Now, we're seeing here a lot of earnings seasons that's bringing a lot of volatility into the market. You got Google, Alphabet parent company here, rising 1.8% ahead of its profit report that arrived. And you also have Ford Motor that dropped 8.4%. due to underlying measure of profit for the full year, likely coming in the bottom end of the forecasted range. Now, you have a lot of the stocks that are right now reporting their earnings. We have like 150 companies that are going to be reporting their earnings for the S&P 500 here pretty soon. However, in terms of inflation, what's happening with resilience in the economy, mortgage rates have been climbing recently because we're seeing the 10-year treasury yields that have been changing and climbing higher. Yields have rallied as a report after the REIT has shown that the U.S. economy remains stronger than expected. And we see on Tuesday today that reports that confidence among U.S. consumers jumped more than economics expected. And the number of job openings edged lower in September, but the number of hires remained relatively steady. So a lot of resilience here in the market. That brings uncertainty in terms of what's going to be happening with the interest rate cuts. Right now, there's a large probability in pricing in that we're at least going to see 25 basis point cuts for a total of 50 basis point cuts in terms of the federal funds rate by the end of the year. If any of that is subject to change, that is where we could be seeing big swings in the market. What do you think about that? Regarding Palantir, do you think we'll see here $50 by the end of the year? Other than that, peace out. Take care. I hope you guys have a wonderful night.